XRP's price action in mid-2025 has been striking. After languishing below $1 for years, it surged into the $3 range levels last seen back in 2018, on hopes that regulatory uncertainty and long-awaited catalysts were finally resolving. By July 18th, XRP briefly reached about $3.60, its highest in years before pulling back slightly. This rally coincided with a decisive legal development. On August 8, 2025, the SEC agreed to drop its appeals, cementing a $125 million fine and effectively ending the 5-year Ripple lawsuit. The clear message was that the regulatory overhang was gone, a fact confirmed by market moves. In the hours after the announcement, XRP popped around 8 to 9%, trading near $3.32, up roughly 8.5%. As one comment put it, the uncertainty is gone, and the path ahead for XRP is clearer than it has been in years. In short, the combination of big technical barriers and positive news flow has put XRP at a critical juncture, one where a decisive move could truly change the narrative around this token. Technically speaking, XRP is now pressing against a multi-year resistance wall. Chart analysts have highlighted a long, descending trend line that dates back to XRP's 2018 all-time high. On that weekly chart, the line connects the 2018 peak, a failed retest in 2024, now the current level around $3.12, $3.20. In past attempts, each time XRP has flipped down from that line. However, many traders note that a fourth assault on the same line is not mere coincidence but potentially a squeeze of years of pent-up momentum. In market jargon, this is likened to a gunpowder barrel effect. After a prolonged consolidation against a solid ceiling, a breakout can trigger a violent explosion. If XRP can close above this resistance zone with genuine demand, analysts say it could signal the end of a 4-year base and spark a massive jump. Indeed, one technical review suggests that clearing roughly the $3.60, $3.66 area would open space for targets of $3.80, $4 and beyond. Another warns that breaking above about $3.65 could wipe out many short positions and potentially drive XRP toward $5, a level not seen since 2018. In this view, the current range-bound trading is simply prime accumulation before a historic takeoff. There are bullish fundamentals to fuel such a move. With the SEC lawsuit resolved, attention shifts back to XRP's core use case: ultra-fast, low-cost cross-border payments. Ripple reports that hundreds of banks and payment providers now use its on-demand liquidity ODL service, often via XRP, to settle transfers in seconds. By some accounts, over 400 financial institutions are live on RippleNet with ODL, and transaction volumes have ramped into the tens of billions of dollars via stablecoins like RLUSD on the XRP ledger. In 2025 alone, institutions are said to have snapped up over $1.1 billion of XRP, helping push XRP to the number 3 spot in institutional crypto flows, behind only Bitcoin and Ethereum. This growing institutional bid is arguably independent of purely speculative moves. For example, XRP's correlation with Bitcoin has been falling, suggesting its own story. In parallel, several crypto ETFs, Bitcoin, Ether, and a bullish crypto market overall, have pulled capital toward altcoins. If XRP were to finally see an approved spot ETF or broader on-ramp, funds by year-end and outcomes, some strategists put out around 85% probability for 2025, that could unleash even more buy-in. In short, many institutional data points and regulatory tailwinds line up in favor of strong demand for XRP once the legal clouds clear. On-chain indicators echo the bullish case. For instance, recent data show whale accumulation at work. CryptoQuant and other sources tracked that in mid-August, large holders bought roughly 900 million XRP over just 48 hours, an unusually heavy load. When combined with falling exchange reserves, meaning fewer coins are available to sell, such accumulation often precedes sharp rallies. At the same time, derivatives markets are filled with short bets. In one analysis, roughly 75% of XRP futures positions were shorts, a lopsided bearish skew. That creates a classic short squeeze setup. If price moves up, many of those shorts would be forced to cover, driving even more buying. Indeed, commentators point out that a break above about $3.403.45 could blow past those stops. One crypto outlet notes that clearing that kind of resistance could wipe out a chunk of short positions, potentially propelling XRP to multiple dollar gains. In short, the charts are showing the signature of latent fuel: heavy longs building and heavy shorts needing to get through, often a recipe for explosive upside. Despite all this hype, the risks are real, and analysts caution against one-sided thinking. A failure at the current resistance could trigger a swift downturn. Since peaking near $3.65, XRP has already given back about 15 to 20%. Cointelegraph's recent report notes that whales have been offloading over 640 million XRP, roughly $340 million, since early July, a sign of distribution pressure. In that light, many technical indicators are on watch for exhaustion. For example, the Relative Strength Index RSI has been extremely high above 80, indicating overbought conditions. Classic sell-side warnings abound. One analyst, Mr.Crypto, points out that 95% of XRP supply is in profit, a condition historically linked to tops. In practical terms, this means almost every XRP holder is sitting on gains, so any sign of weakness might trigger profit-taking. On-chain, large Binance deposits of XRP, including one of the biggest ever, have appeared recently, which often presage selling by whales. Even the weekly momentum is diverging lower, suggesting bulls are tiring. Crucially, if XRP fails to clear resistance and instead breaks below key supports, technical analysis argues it could backslide hard. Cointelegraph specifically warns that dropping below about $2.65 would severely damage the chart, undoing months of gains. On a shorter horizon, the first support is around the $3.05 to $3.20 zone. Brave New Coin notes that holding above roughly $3.05 is critical to keep bulls alive. Close below that might open the door to a retest of $2.80 or lower. Another projection outlines a bearish scenario where failure below about $3.45 swings price back toward the $3.30 range, and in an extreme sell-off even as low as $2.80. In practice, traders caution that a multi-billion-dollar saddle resistance wall does not give way gently if it holds. Many stop-loss orders would cascade into a swift decline. Broader market and macro factors also temper the picture. Cryptocurrency markets remain sensitive to interest rate moves and risk sentiment. Some analysts point out that late summer, for example, September historically sees reduced crypto appetite. And with a Fed potentially cutting rates soon, volatility could spike in either direction. Moreover, even after the SEC case closed, Ripple still has constraints. For example, institutional sales of XRP are still barred, and the $125 million fine is a tangible cost. Regulatory uncertainties in other jurisdictions could surface too. There's also competition. Central bank digital currencies, CBDCs, and other cross-border solutions may vie for the same market, which could dampen XRP's long-term edge. In short, the same everything-at-once scenario that could drive XRP wildly higher also means it could drop sharply if conditions sour. Putting it all together, XRP's current situation is balanced on a knife edge. On one hand, years of waiting, the set case victory, and a cluster of bullish technical signals argue that a breakout could be imminent. Some say the biggest pump of your life, potentially kickstarting a new bull cycle to $4, $5, or higher. On the other hand, skeptics highlight how stretched the rally already is, how many holders are poised to book profits, and how a failed breakout could force a fallback to last year's levels or below. In practice, this means traders and investors should be cautious. Those who believe in XRP's case see this as a calm before the storm moment, a narrow trading range that, once breached, could unleash violent moves. But others see it as a trap. At these highs, a stall or reversal could be nasty. In this climate, the near-term outcome likely hinges on the next few closes and volumes. If XRP can convincingly break above that multi-year ceiling, say the $3.65, $3.70 area on strong volume, it would not only invalidate years of resistance, but also spray cascading by orders and short squeezes into the market. That could propel XRP into uncharted territory. Think new ATHs near $5. Alternatively, if it fails and falls below support around $3.05, $3.20, markets may interpret it as a sign of waning momentum, possibly sending price back toward $3 or below. Current indicators like increased trading volume with sideways price action reflect precisely this tug of war. In any case, everyone from retail speculators to institutional managers will be watching closely. Bottom line, XRP is at a crossroads. The settlement of the SEC lawsuit and robust technical setup provide a plausible catalyst for a historic breakout. But the flip side is that failure to exceed long-term resistance could trigger a sharp retracement, recalling that brief early August dip and warnings from analysts. Savvy investors will prepare for both outcomes, sizing positions prudently, watching key levels roughly $3.10, $3.40 as pivot points, and using stop losses in case the $2, $3 zone comes back into play. If and when XRP finally clears that major barrier, it may indeed write a whole new chapter in this token's story. But until then, two-sided vigilance is the order of the day.